Good morning, everybody. Happy Friday. Welcome back. It is 9 o'clock on August 30th. We are wrapping up the month. Final trading day headed into a holiday weekend with Labor Day on Monday. We're going to see if the market's going to give us some excitement, some volatility. We've mostly been staring at indecision here for about 8 trading days. If we take a look, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days of indecision on the S&P. Testing some highs, testing some lows. Nothing really standing out as far as the open goes. I did have some pesky little assignments in my stocks and options account that I will be tending to this morning. I did some earnings plays on CrowdStrike, Salesforce, and Nvidia, and those in the money credit spreads. One side was assigned. It was the bull put side on the Nvidia. I believe all were down. Like they all ended up dropping. So got to get in and show. Hang on a second. Yep. So I have 1, 2, 3 assignments that I can get rid of today for some instant buying power. No big deal. So it looks like this. If I go into this account, all symbols, I'm just going to check and see. Let's go symbol here. So I did have a trade on CRM. They assigned me 300 shares, which is annoying. So I'll take care of that with the, this is an assignment for long at 282.50. Let's go CRM here. 282.50 was the assignment. I still have the 280 long put. So I should be able to close that out for a really small loss. I collected 371 on the credit spread. So I had about $1.85 out of a 250 spread. So I'm looking to close this out for like a 70-cent loss when it's all done. But I'll probably wait till a couple hours into the open, let the bid ask get a little bit tighter. But I'll close out my 300 shares with a long put and manage that. We're trading at 256. My bear call spread is 242. I'll see if prices get down there and see what this whole thing trades for. CrowdStrike, that one's fine. And then Nvidia, same situation, assigned me 300 shares. This was the 142 by 141. My bear call spreads 112 by 113. See if I can get some profit out of that. So just a little bit of maintenance. It's no big deal. I mean, they're credit spreads. It should be fine. I've got the hedge side of the trade, so it's not a deal breaker. Just like I said, a little bit of maintenance that I got to deal with this morning. So Daniel, good morning. Chris, good morning. Keo, good morning. Keith, what's happening? All right, Keith, keep that stress low, man. Stress is a killer, as they say. Good morning, everybody. Happy Friday. Let's see. The markets feel like moving today. So economic data-wise, we came out with core PCE. From what I saw this morning, we printed 0.2. 0.2 forecasted, 0.2 came in. Personal income on low impact news did go up by 0.1%. That's not really a mover, but that was PCE to see if this was higher or lower. I was looking for the core PCE year over year. Let me see if I can find that. Did this just print? See if this just printed. So 2.62, we go out to like 5 years. All right, so we've been in the same ballpark, like 2.6, 2.59, 2.58. So I mean, we've trended lower, but similar with CPI was 9.1 year over year. Now we're at 2.9, right? 2.9, 2.8. I mean, it still shows that things are getting expensive and increasing in prices, but just doing it at a slower pace. And core PC, same type of thing. This is where it goes directly to consumers, right? So your core PCE, you're looking at the change in prices purchased by consumers, of course, because it's core PCE, it's excluding food and energy. Um, I mean, food prices have come down quite a bit, but just again, prices are still higher. Go to the grocery store, look at what's in your cart. Nobody's really happy with what their cart costs now. Um, I go out with self checkout and like a bag, and I'm like, how is that $80? How is that $100? What am I buying here? So, but apparently it's cheaper than eating out. All right. Let's see. Dell, CEIX, BMY, ELS, something to look at maybe. Yeah, Dell and Intel I've been keeping an eye on. So Dell at 110. I mean, this looks just like almost I mean, SMCI got smoked this week to the downside, but I mean, it looks like a semiconductor play. Um, I mean, Intel's been crushed to the downside as well. Look at that. I mean, we're coming. I mean, Intel is going back to levels we'd have to go, I think, before 2008. Last time we were at this type of low would have been 2012. We're talking financial crisis lows at 1250, 0102 like dot-com bubble lows at 13. I mean, we're not that far off those lows. And what I don't necessarily want to do is say, well, this is such a good deal, but then have Intel just be like garbage, and you're just throwing money at a company that has no real turnaround plan outside of like, hey guys, we're in the AI space. No, I swear, like we have chips. I mean, maybe they do. Obviously we know that Intel has chips, but Nvidia's been the king of chips here the last 3, 4, 5 years, and the growth that Nvidia's experience has just been I'd say exponential, but it's just monstrous. So I don't know. I mean, I had Intel in this area in the 30s and 25s. I did a lot of credit spreads in that area and took a nice little chunk as we rallied back in 2023. But glad I didn't start participating kind of in the same arena unless I was going to be more active. So yeah, Daniel, let me take a look at those. So we've got Dell. So let's look at the higher time frame. Here's the weekly. Um, I mean, I see a case for at least holding the support zone. Nice bullish candle off this kind of, it's, I don't know, maybe a morning star with the decision bearish, indecision, decision bullish. I can see some consolidation, but maybe a stab. I mean, if it stays above this low, then sure, I could see a recovery, right? If we get on the right hand side of this trend line, sure, I could see a recovery. So either one, it takes some time, two, it settles back in. You know, Also, we might see a lot of stocks over the next maybe 6 months, 9 months, 12 months, where we're not making new highs and new lows, right? And we're just going to have some grind in some of these stocks. And tech has certainly done that before. Tech has done that for years and years and years before. So I think as I would possibly get a campaign or core position started, it would likely be stay out of the way, set some option trades up for sells like credit spreads or cash secured puts ratio spreads, something along those lines. Would I want to own Dell at $100? Maybe. Let me check and see what they look like on a snowflake analysis here. Let's go Dell. Unstable dividend track record, insider selling, high level of debt. They grew, they're forecast to grow, they're trading well below estimated value. PE is 21.8. That's not terrible for a tech stock. Not great, but I mean, based on discounted cash flow, 52% undervalued is pretty decent. Is Dell making anything, or are they just benefiting from being in the space, talking about chips, computers, AI? Not really sure. I probably have to dig a little bit deeper. Looking at their that's crazy. Seagate Technology up to 61.2 price to earnings. HP. Okay, so 2020 crash, and they've really not recovered since then. So I don't know. To me, there's just something a little bit missing here that you can have a peak here in May of 2024 and have this type of pullback. I mean, it's pulled back 51%. So I'd say options only to get started. Probably not wanting to take ownership of this stock at $88. I think if I'm going to put anything towards $80 to $90 a share, there's a lot of other stocks I'd rather buy. But a trade's a trade, and options, you can define the risk, and it should be, just a play. So that's how I look at it. Console Energy 101. I see a lot of range trading here. Possibly energy is going to be something that I want to keep a close eye on over the next probably 12 months. I mean, to me, if this is setting up for a wedge, I would be looking for, again, same thing, like, okay, so put up some option trades where we kind of start this core position. If we get a breakout, I want to see what they do first. But if we have a breakout, yeah, I mean, this has been in a pretty healthy bull trend. This could be a correction, right? So if this is 1, 2, 3, 4, 5, and all this is a pause for a resumption of the trend, let's see what this looks like. CEIX. I didn't think I typed that in correctly. CEIX. Console Energy. Earnings forecast to decline by an average of 4.1% in the next 3 years. Profit margins lower. Okay. Let's check their price to earnings. I mean, that's a crazy fair value move. 7.1. I mean, man, this is relatively, I mean, this is kind of cheap, 7.1, but what do they do? Coal? Oh, okay. So I'd say Real Energy. I wish it wasn't $101, but man, I think some options play would be worth it. I'm going to take a look at CEIX for ratio spread. It's not bad. Gail, good morning. I'm going to write this one down, CEIX, and then look and see if I could possibly find a variety of other stocks in the coal space. What just happened there? October 18th, QQQ. What did I just do there? It's 9:15. Let me double. I just had a bunch of trades try to get filled, or do they get rejected? I think it was a butterfly spread. That was strange. It was. I don't know. I'll have to find that out. What the heck that was. All right, we'll come back to that in a second. So CEIX, don't mind it. We have been, we're in a wedge. So I'd probably look at ratio spreads on this one if I want to be in that space. It's definitely an allocation that I think is pretty heavy. I mean, if I'm going to buy this thing, I would say I'd want to own it at 80 or less, just in case we have high, low. If it consolidates here, we might have like a fake out retest these levels. Wedges, I'm always pretty suspicious of because this could look good to the upside, find resistance, and come all the way back down. So I'm just going to treat this like if I want to own it, probably somewhere in this area or in this area. So between $80 and $55, maybe, put $1,000 in it, put $1,000 in it, dollar cost average in, and then see this thing, more than double in price if it's according to its discounted cash flow model at $300+ a share. Sure. I mean, there's a lot of upside there, but probably not taking full control of an options trade where it's 100+ shares. But I do like that one. I wrote it down. BMY. Let me take a look at that one. Oh yeah, Bristol Squib. We talked about this one, and Again, good support right around this like $49 level. I am in Pfizer and still watching Pfizer. Similar space, probably better P or BMY. So Pfizer's in the same arena. So is Merck, Johnson and Johnson. I do have some Johnson and Johnson. I didn't trade Merck, but I think I had something. I want to say I have a trade in BMY. Do I? I thought I did. I guess I don't. Do I have anything in Merck, MRK, or maybe I just stuck with Pfizer? I have uh, a diagonal spread with Pfizer that is every couple of weeks I'm making like 300, $400 on it. If it doesn't get called away, I just keep chipping away at that cost and try to increase the cost, well, increase the net profit, but lower the cost basis of the debit spread. BMY it's okay. I mean, are we going to settle back in here to great financial crisis lows in the sub 30s? I mean, if I'm going to own it, I'd say I'd love to own this thing in the $20 and $30 zone, being fully aware that yes, we might go sideways for a longer period of time. I wouldn't get super excited about a dividend stock at 4%, but if this level holds, we're at 49.70. Let me see what this low was. I'm assuming that low's around $40. Yep, 39.60 or so. So yeah, I mean, if I put in a ratio spread, I could probably, yeah, I'll take a stab at it. So BMY, but it's in the same space as Pfizer. Okay, Pfizer's trading at 28.66. Looks like my $29 level is likely just going to allow me to lower the cost basis a little bit more. So let's go Pfizer. So I started doing a little $1,000 chunks in Pfizer for just holding and growing, and then 25 by 29 is my debit spread. That my cost basis is now like $2 and change. So I'm just trying to get it called away for a couple of dollars, and I'll hang on to this one. So this one goes out to next Friday, and if we're above 29, I get it called away. If we're not above 29, then I'll roll it, or not roll it. I'll just either let it not get called away and put on another sell call, or I could roll this and just kick it out another week or two and grab another 30 to 40 cents. So I'll continue to kind of work some costs there on Pfizer. FXI 2650. That's for today. That's going to get. I'll throw in another covered call on that one to keep repairing it. All right, should be good. Okay, and then ELS. I'm not sure what that is, but let's have a peek. Equity lifestyle properties. If it's build to rent, I'm kind of interested because that's probably the biggest phase coming in the next 3 to 5 years. Build to own depends on rates. I saw that mortgage rates were down to 6.35, so there's still some more softening to happen here. The Fed's likely going to cut if that campaign of cutting continues. I'm looking for, and I mean, I'm in this arena. I'm looking for a home Q1 of next year, and if all goes well, I'd like to see rates, 5.5 lower, 5.25 lower, just on the kind of national average. But I'd also be interested in kind of aggressively buying down my rates to maybe sub 5. I think that'd be a reasonable spot to close at. I mean, you can certainly get a lot more house for a sub 5% interest rate as opposed to even 6.35. But we have come down quite a ways. So I mean, the trend is looking better. I mean, we peaked up here at 7.8 to 6.36. So not bad, not bad. All right, let's go with ELS. So what do they do? Lifestyle oriented properties, primarily manufactured homes, recreational vehicle communities. So that's RVs. Home sales rental. All right, I was gonna say home sales rental properties is good. Fairly decent. All right, let me take a look at their fundamentals. It's been a pretty good run from financial crisis. Peaked out around 88. Let's see what their ELS. Debt not well covered, but it's in the real estate space. We do have a reliable dividend. Earnings grew. Earnings forecast to grow. Slim margins, but margins of I'd say 5%, 10%. I mean, like Pulte Homes tries to build at a cost plus model, and they're trying to get like 20 to 25% per home, trading below estimated value. 12% is not a huge upside though. 37.6 price to earnings. That's a little high. And I don't know. I'm not excited about a dividend when you've got upside of maybe, $80. You had overpriced at, 88, but fair value at 81. We're trading at 71. If we came back down to $60, so here's what I'm going to do in this one. If we come down to $60, I'll take a look at it. So I'm going to put a chart alarm here at 61. I think that's where I would play it. I could probably stack some credit spreads down here. Maybe give me 3 to 4 months of credit spread option plays if the prices are good, right? Do we have options on ELS? I'm assuming that we do. Okay, and do we have? No, okay. So flexibility wise, there's a dividend, there's earnings, we have monthly options. Let's see what September or October look like. I mean, these are terrible. So if we're, I don't know, this would be a tough one for me because the options look so bad. So you have monthly options, you have $5 spreads, you essentially have zero bid of anything out of the money. Those have been very challenging in the past. So if you're not really price sensitive on it, then maybe there's a play there. But for me, having no bids for anything that's just slightly out of the money, I mean, we're trading at $71 and a $70 right now shows no bid from yesterday. So I don't love that. So I'll probably put that one on the sidelines. But I do have a chart alarm set. I wouldn't mind looking at like a cash secured put, maybe a ratio spread, just putting a chunk at it and see if there's some growth there. I mean, if I took $1,000 and turned it into $200, like that return on capital is okay. Wouldn't cost a ton of money, but that's about where I'd see myself buying it. But all right, thanks for throwing those out there, man. I like it. Let's go through the top down here. We got opening bell in a few minutes. I will be putting on a little trade this morning. So let's go to my SPX. There we go. Today is the 30th. So SPY, let me get through my chart. Well, you know what? How about we do this? Let's do new layout, cleaner and fresher. It's going to be my my new chart. So I'm going to go SPY. And now I have no crazy lines on my chart. All right. So where we are at, where I see us on the SPY right now is we're dealing with a bunch of indecision. We had our, waterfall from mid-July into the bottom August 5th. Market still has some support. I guess the concern, if we look back to this low we had back in 2022, put out a couple of trend lines. I'm just going to draw these with my drawing tool. So we put out a low there and there. That August 5th level did break this low, but again, if that's like fake out, rip up here, I think where we're staring at prices right now, we have about 8 or 9 days of indecision. Get out of there. We have 8 or 9 days of indecision. And I don't know if there's really much to do here, right? I mean, right now, 1, 2, 3, 4, 5, 6, 7, 8, 9. So this last candle here, decisive, and then everything started to go sideways. I'm just going to box this in. And I see a pretty simple floor at 555. If we break below 555, then we're likely going to come back in to try to find some gaps. I think that this area is really strong support. So that would be a structure level. That would be a structure level. So if we are going to break below 555, we might have a quick fall to this area. I would be more bearish in the market in general if we are getting below this 540 handle. We get below 540, then perhaps we are, trying to make an attempt to get back down to the lows. Just from a simple trend line break, something like that. I mean, I am always going to tend to lean to a market trying to find higher lows, higher highs, trying to push higher, trying to justify maybe this S&P getting to 600 this year. But if we are sideways for today, next week we do have non-farm payroll on Friday. Is there going to be some movement prior to that? Are we going to see, one way or the other? Is price wanting to leak or go somewhere? To me, it looks like this pullback would make some sense. These lows would make some sense. As a buyer, I'm looking in here for buy trades. So for today, not really expecting much. I mean, we're opening back up around 560. Is it enough to test the highs? Probably just, I don't know. I don't expect price to do much early in the morning. PC's probably being digested. It came in as expected. So pretty straightforward, but that's where I'm at. I'm just trying to clean up the charts. I see a lot of indecision right now that we're going to have to wait for. To the upside, I'm willing to take a couple stabs here. So if we hit the upside, I am looking for upside to get tested. If that's the case, I'm probably going to put on some bear call spreads and try for the month of September to see this go lower. One thing that September is going to give us is a lot of volatility. We have pretty much every central bank out there doing some type of rate decision. Plus, we have all the U.S. news that's going to matter to the U.S. economy. Your inflation data once again, all your employment numbers once again, plus your central bank on the 18th, and it's going to be highly anticipated around the Fed. And what happens with those calendars is they all sprinkle in like, oh wow, we've got 4 rate decisions this week, we've got 3-4 rate decisions this week. So within probably a 2-week window, we're gonna have all this stuff being digested by the news, and I can't really imagine that the flurry of news is going to be super optimistic for the markets going into September, but could be wrong. I think a pullback is needed and probably healthier for us to get higher for the year and sustain a rally. I think we have to actually pull back a little bit and then justify making higher highs, as opposed to, this would be my kind of least favorite thing, would be that we, just start breaking higher, and we still keep going. And that just was, hey, if you bought it August 5th, congratulations, you just had a great trade, you know? But if you didn't, then you missed out, and that would be really frustrating. So, okay, what else do we have here? The all-time highs at 565. We're just still sitting there with some indecision. Let's see if we can get some price to oscillate here. I'm going to center this thing around. Let's go 5. Here's the daily. Let's go 5-minute chart. What? Oh, there we go. It's just a little lag. All right, I'm taking that chart off. There we go. That's what I wanted. There. Okay, so 56.18. I'm going to take a look here. 56.18. And, oops. Centered around 17. Okay, so gap is around 92. Look at a little indecision this morning. So if I go out to a 15 delta, there to there, and on the downside, I'm going to do a 13 delta on the downside, 75.55, grab 330. See if we can get filled at 330. Not filling at 330. Try to get 325. Come on now. All right, 310 final offer. I'm going to try to get 315. Come on. Filled at 315. All right. So filled at 315. Just going to set a chart alarm. 315 times going after 47 bucks. So 3.15 going after 47 minus 3.15. Debit at 267. So we're at 56.20. I sold the 56.55 and the 55.75. Okay. So let's see if 315 can just oscillate here for 10, 15, 20 minutes. Directionally, I'm going to get some orders stacked up here. Let's see. Let me get into. All right, let's go SPY. Just getting some trades placed this morning. I don't really see a lot of. I mean, I see my gamma levels to the upside on the SPY. Let me take a look at the Qs. I've had some pretty good call options working this week. We gapped higher in the Qs. The one level that stands out to me this morning is going to be this 470. So I'm going to look at some Q plays and try to head down to 470. If this starts to fill up to the upside, I'll probably put just maybe an out of the money at 470. Let's keep an eye on that one. So this is a 0 DTE. All right, so a 474. All right. Let's see. All right. 474. And there. Okay. And then on the SPY, taking a look here. We're just kind of chilling out in price, which is good. Hopefully my SPX will drain out a little bit. Okay. So these are the levels that I'm watching. So it looks like the SPY is more likely to have a resiliency to try to get up towards. It's not highs again. So when this was at 565 all week, I'm like, all right, this market may be wanting to gravitate towards those highs and poke that high, but we're not there yet. So now we're right here around 564. These are a little bit on the small side as far as net size. I'm just looking to see, do we start to fill up to the downside? We see call option sentiment 78 to 0. So we'll keep an eye on this one. And then QQQ, same thing. I'm looking for the Qs to be a little bit more definitive to the downside. If we have a gap fill that brings us down to 471, and 470 is my kind of big obvious strike level. I mean, we did make a run there yesterday. So we had a drift up all morning, and then we quickly faded for the afternoon. I did not take advantage of that, unfortunately, but there were some nice levels at 470 for the day. So we'll see if we make another kind of similar play, or maybe just oscillates here, gets up to the same highs again, and then we'll see if we head down just a little bit. All right, I'll park that back up there. So keep an eye on the SPX. Let's go fresh and clean chart. Here's the SPY Qs. Okay, I look at the same type of thing where if we have trend line like right in there, this is pretty good structure. Okay, we don't have the same type of indecision on the Qs like we have in the SPY. The SPY has just been going sideways. The Qs have been pulling back just a little bit. So I mean, if the bulls are going to wait and we just keep kind of drifting lower, I mean, this actually would be a healthy looking correction for then the bulls to kind of resume with a trend line break, resume in here, stop losses below, and then if the Qs want to make a run to these highs again or higher, there's some pretty good trade in there. But I will be patient just to see. I mean, there's a gap area, there's a gap area, there's previous structure back in here, so I could just see a little bit more struggles, I guess, as we head into September. If we go to NQ feed, we go ES feed. So ES is indecisive. Yeah, this is going to be interesting. I mean, we did take out this high. So if we do have some bulls in the game, they may be trying to take it up here. I just don't know if September is going to offer that. So I think in here we get a little messy, a little sloppy. I would almost lean on the Bears having a little bit more say in just a pullback. But just get ready for, I mean, this 18.8 level on NQ, or I guess if we were to retest the lows, but we're trading at 19.5. I'd like to see kind of 19K or maybe 18.8. Just depends on how violently bearish we get. If we get below this level, then I would definitely turn a little bit more bearish. But if we stay propped up with that level of support, this is just kind of indecisive and choppiness, and we'll see if this settles in for a break. And once we get on the right-hand side of this trend line, maybe there's more room to the upside. So that's Nasdaq futures. The Dow, we've actually cracked a couple all-time highs in the Dow. Impressive. Nice little rotation, and the Russell's been doing okay as well. Yesterday, the Russell was positive, the Dow was positive, the SPY was flat, and the Qs were down. But the Dow is just slightly getting above these higher highs. We are making higher lows, higher highs. We're trading at all-time highs right now. I don't know how much volatility the Dow is going to give us. I don't know if this is a runaway train. I doubt it. I would expect more of kind of, if we go sideways on the Dow, we've got to justify higher highs. Or if we have a pullback coming, we look for higher lows, higher highs, and we might just have a lot of volatility here coming in over the next maybe 30 to 60 days. So that's my thoughts there. Let's take a look at the Russell. Let's go IWM. Trading at 220. I do have a broken wing butterfly today on the RUT. That's at 2100, which is likely going to hold. I mean, if we drop today on the Russell back down to 2100, that would be a drop of around 5%. I doubt we're dropping 5% today on the Russell. If we do, that's a profit trap, which would be a bigger profit for me. Otherwise, I'll make $1.15 per contract. And then same thing here on Russell. So we're hanging in there with some resiliency. We're not at all-time highs. We're still, I think, double digits off those all-time highs. So we're still 11.5% from all-time highs on the Russell. But it's hanging in there with higher lows for right now. Volatility index. We had a little bit of elevated volatility towards 18, coming back into 15 again. Maybe that's our new normal, is kind of this 15 to 20 range. So we're slightly elevated, but nothing that seems scary. Obviously, there's still concerns that we could drift up into the 20s. I'd say 20 to 30 gets a little bit scarier, especially if we have a sell-off. I doubt we're going back up to 60, 65 again. But if we have a little bit more elevation to 20 to 25 or 30, let me check the VIX term structure here. I mean, the market's anticipating slightly higher volatility over the coming months. Interesting. Yeah. So this is just going to be, I mean, it's elevated, but we're just going to get more and more decay each and every month. So this is like proper term structure as far as what we're used to seeing, which is why I'm holding long SVXY, which, by the way, that actually might work out and still be a really good trade. So SVXY, I have puts in the 50s. I've got puts at 35. I bought some shares at 40, and I'm looking to see if I'm holding this thing. I may not hold it all the way to the highs, but that is a pretty good trade, which is why I got into it at 40. And did some, cash secured puts. Is like, I don't know if it's just going to rip all the way back to the highs or not, but if it does, cool. Let's see it happen. If volatility just kind of stays under control, then this likely will find a way to drift higher. Oil, really volatile on oil. I'm glad I'm staying out of the way. We've talked about structure down here in the 60s. I am playing some oil. It's it's not really a ratio spread because I don't want to own the shares. I'm doing it on CL. So I'm just trading a naked put around 65, and I have like a $55 hedge for long put. So I have one naked put to like two long puts. And just in case we have some type of oil crash, I'm just using that long put to offset and hedge. Natural gas, we're sitting here at slightly higher lows. I've got a chart alarm set at $1.50. I may take some stabs there at the $1.50 mark. Gold at 25.18. Really quiet the last couple of weeks of trading in gold. Sitting at the highs. I'm not sure if this is making everyone nervous. Waiting for a pullback. I'm just going to put a trend line here. So we had this big breakout level. We measured that move. I mean, that was pretty simple. If you went from high to low, okay, and then just clone this, that was my first big measured move on gold. And we hit it, and it's right up to these current levels. So with this level getting hit, I'd like to see a pullback. That's an outer trend line. Inner trend line, maybe something like that for some decent support. So I'm just going to be patient. I mean, if gold wants to run away, I have shares of GLD. I'm trading GC with put spreads and all sorts of credit spreads just to generate some income. Same thing on SI. But if we have a pullback, I'm looking to add more to my GLD position. So, but that measured move, I mean, we're trading all-time highs. So how high does it go? It's all just kind of speculation on, where the market's like ready to take gold. Maybe it's 3,000. Maybe that's the big round number target. If we go to silver, I do like the structure on silver as well. Trend line, put a trend line way out here in silver. And I have measured moves, which I put this on my other chart, but I'm just trying to clean up that workspace. So that measured move to here. So this is my target. At least my first target is going to be this symmetry around 35 and change. And then if I stack up another one, it would be based on if we pulled back to this level, that'd be my next level. So as far as measuring moves and measuring impulsive waves, that's going to be my play on silver, looking to stay to the upside. Any pullbacks in here, we also had a recent breakout around 26, so that to me was resistance becoming support. What I'm looking at on silver for right now is that we just consolidate and watching this area. If we go up, pull back in here, I'm looking for a breakout if possible. So if we have a nice little breakout, awesome. And $35 to $36 first target. So SLV, SI, trading those quite a bit. Bitcoin at 59. Pretty nasty turn this week from 65 back down to 58. Bitcoin still making lower highs and lower lows for right now. So kind of channel bound. I like at least it's showing that this is a healthy phase for Bitcoin. I think having this type of run, having this larger accumulation zone, I think this looks pretty healthy. I would like to see Bitcoin, obviously make a bullish move, get above this 68 to 70K mark. And then once we get up here, if the bulls can hang on to this, 100K is not that far away. I believe the current mining costs are like 79K. So that would put us up to all-time highs, and we're going to see if actual spot price can catch up to it, and then maybe have a run. This might get interesting with the dollar. The Fed cutting. Fed cuts rates. Gold's going to look a little bit more attractive. Bitcoin probably a little bit more attractive, and we'll see if we have some of these ETFs also taking off. Ethereum. I'm still long on Ethereum. I have a couple credit spreads in here with EETH. Let's see the Nikkei. Nikkei is green. Japanese yen weaker. Let me take a look at the currency strength chart this morning. We've got Swiss and yen weaker, Aussie down, Japanese yen get weaker, Swiss weaker. That's good. Let me check on my Swiss positions here. I did stack some orders up on CAD Swiss this morning. We have dollar CAD on top. So we did have some news out of both, I believe, right? CAD GDP, I think, this morning. CAD GDP revised slightly lower. Okay. So Japanese yen getting a little bit weaker. The Nikkei is still up, making this recovery. Look, this is a crazy chart. It really is. I mean, at this point, with this 27% high to low, I'd almost like to see the Nikkei have some type of pullback and then justify, making another run. If this thing goes from V bottom and just keeps going higher, it's just like you're trading the freaking currency. So I don't know. I'd like to see a pullback. We have a decent gap in here. So if we just kind of melt up, challenge this level, maybe pull back a little bit and see if the bulls can step in and actually have a buy opportunity, as opposed to you had to buy when it was 20% off, 25% off if you got lucky. Otherwise, I don't really see a play on it. So I'm not that interested in the Japanese yen. I think it's an excruciating currency pair to trade, but CAD Swiss, I've got some orders stacked up. I'll be watching that one. I'm up a few bucks on my Swiss crosses right now, so that's fine. All right, what else we have here? DAX up to all-time highs. FTSE making a comeback. Hence saying the China market can't get out of its own way yet. Brazil down. I have some. Did I buy shares of EWZ? Let me check. EWZ. I did. Okay, I bought some shares around 30 bucks. FXI at 26.51. This may get called away this week. I'll be watching that one. Fine. I have some shares of IWM as well. I'll be watching that one. And NVIDIA, I need to take care of these assignments later. The expiration on NVIDIA is out to next week, so I technically can take care of them. But for this account, I've got 1, 2, 3 accounts. These are IRA accounts that I need to square that up. So I'm trying to make sure I can close those out for a very small loss. It should be like 65 to 70 cent loss when it's all said and done. But I'll clear those up today and then see what happens for next week. Everything else looks okay for now. Uranium, still watching some of that. Some naked puts. I bought some shares of URA. I've got a couple dollar cost average levels in. SVXY, some shares and some puts, trying to generate some income there. SPY. I do have some hedges that will expire worthless this week. That was playing some defense right after that August 5th bottom, in case we had a pullback and then another flash lower. So I'm going to take probably a 0.25% to 0.5% losses on this August 30th expiration for some of these hedges that I put on aggressively right after that that kind of scary event we saw with Volmageddon 2.0. Everything else looks okay. So, all right. My SPX trade's got to be close to giving me some profit here. Let me see what it's trading for. Right now, SPX 1, 2, 3, 4. Trading at 305. And it's right around that center price. Okay, I'll keep an eye on that this morning. Did I put in my debit? I don't know if I did. Hang on. I need to put in a debit there, 267. Go 1, 2, 3, 4. Okay, we'll go 265. Okay, so trying to grab, got filled for 315. That'd be $50. See if that works out. So keep an eye on that one this morning. Any other charts? Any other questions? Daniel, thanks for those tosses. I know it's been a different week. I haven't been live as much as usual. I'm going to be live with A1 Trading at 10 o'clock at the top of the hour. So we'll just come back on to the channel here. So I'll just take a little breather in a couple minutes. If you have any requests, you can just pop on into that next stream if you want to. Bring some charts, bring some questions. Let's see if we can get some other trades going. I will take a look and see if it's easy to manage some of those credit spreads, because if it is, I'll close them out for the small loss. If not, I'll let things settle in a little bit towards the afternoon when things kind of die down and just get those bid-ask prices a little bit tighter. And for the most part, we're just kind of staring at some indecision still, which doesn't surprise me going into a holiday weekend that will have things a little bit on the quiet side. ES making a run. MES. Okay, taking a look at everything here. So getting some bullishness on NQ, MNQ. Upside, let me take a look at my VWAP here. So with that sell-off yesterday, let me have a look at this chart. So we're sitting right in the middle of the VWAP, which I'm just looking at the same area, just kind of playing out. So we'll see if we get choppy. If we break above, I'll close out that for a small loss and see if there's any more upside. This was where we hit yesterday above the VWAP. So if we break above here, let's see if it's an actual break and close, and then running up towards these highs from yesterday. I might end up doing a reversal here on the NQ. So that's where I traded it yesterday, was break, retest, got long, took profit right up there. And then I did have a short position that I closed out for a small win. It was like $140, but that was the trade that I was looking for. Not necessarily all the way back down to the lows, but just getting back to that VWAP. So I'm going to keep an eye on this potential chop for the morning and see if I can just get that decay out of the SPX. But watching to see if we get a breakout to the upside. Looks like we got some price action trying to push up here, but I'm not taking the bait if we're just going to show some indecision right at that weekly VWAP. So, all right, let's take a small break. I'll be back at the top of the hour. Just come back into the channel, 10 o'clock, and we'll continue on. Bring some more charts.